What's going on, guys? Welcome back to Learn Crypto. We have another interview here with Ed Iskra, the community director for Bitcoin Gold. How are you doing today, Ed?
I'm doing great, Nick. How are you?
Pretty good. Now, guys, this isn't a full overview or review of what Bitcoin Gold is. If you want to know from start to finish what Bitcoin Gold is, go in the interview section on our homepage. We did already have an interview with Ed here, so make sure to check that out. This interview, we were having him back to talk more about the attack that happened on the Bitcoin Gold network, kind of see their perspective and what they have planned for the future, as well as kind of touch base on some new partnerships, announcements, projects, etc. since the last time we have talked, and then really kind of just get Ed's opinion on blockchain ecosystem as a whole. So I guess, Ed, if you just want to jump right into it, what happened with the B Gold attacks?
Okay, so around the middle of May, we and some of our exchange partners noticed that there were a couple of block revisions. And those are indicative of either some sort of natural chain split happening, which can happen accidentally because mining is a stochastic process. It could indicate somebody putting up bad software and causing a chain off to the side, creating orphans, or it could indicate a 51% attack, which is what we determined eventually that it was. So there were a number of reversions. They got longer and longer, and we are aware that several exchanges were attacked with a double spend attack. What a 51% allows an attacker to do is to attempt to double spend, because when they create two chains, there's the public one and there's the private one. On the private one, they are mining in complete hidden nature from the public chain. So on the public chain, they send money to an exchange. On the private chain, they send that same money to themselves, and they grow that private chain to be bigger because they have more hash power than the public chain. And what happens is when the exchange approves their deposit and allows them to trade into another coin and withdraw that coin, then they release this private chain, which is taller, which becomes the real chain, and suddenly their transfer is to themselves, not to the exchange. It's effectively a way of bouncing a check. You send a check to the exchange, after it's clear they let you buy something with it, then you make the check bounce. Now, of course, with real checks in the traditional system, that takes days and days to happen. On the blockchain, it happens in a matter of minutes or hours. So that's what the attackers were doing. They appear to have attacked a number of exchanges. They started with exchanges that have shorter confirmation requirements, and then attacked exchanges with longer confirmation requirements. And of course, the ones with shorter requirements, when they saw attacks happening, quickly ramped those up. And we were sort of in panic mode. We were contacting all the exchanges, all the contacts we had on the inside in every way we could reach out to them to give them the heads up that this is happening, that they need to monitor for large deposits, that they need to look at particular addresses. We saw the attacker's address. The attacker was using the same address every time. So we were sharing that address. We tweeted about this. We posted about this all within a day or so of the initial attack. But the attackers simply escalated. It went on for another day and a half. And the longest block reversion we saw was 22 blocks in a row. And of course, whatever exchange they were targeting with that attack probably was requiring 20 confirmations at that point. But the truth is, you could require 50 confirmations and the attacker could just hold out for 52.
Yeah.
It's simply a matter of cost ratio. If an exchange is going to allow a deposit and withdrawal of $500,000, then the attacker is going to be willing to spend several $100,000 performing the attack. And in order to make it prohibitive on a cost basis, you have to run your confirmation limits so high that it becomes impossible to use that as a defense. The real defense is that when you raise your confirmations, you have more time to see what's going on. It gives it gives our team time to notice the attack and communicate with people. It gives the exchanges time to look at their deposits and identify any aberrantly large deposits so that they could give them manual review and make sure that this is a known and reputable customer they've done business with in the past. And if they don't allow that deposit to be traded and then withdrawn, then they won't actually lose any money. Because of course the BTG deposit that came in, which was a double spend, that was a deposit that then disappeared. So that's not a loss, that's a net zero. But if the exchange has allowed them to trade into, say, Bitcoin and withdraw the Bitcoin, that Bitcoin is lost and they no longer have the corresponding revenue.
Yeah.
If the exchange manages to freeze that account and they never pull any money out, then there's no loss. So raising the confirmation limit gives them a defense in the sense that the attack cost goes up, but it also buys them a lot of time to see what's going on.
Interesting.
A lot of people have been wondering where this attack power came from. There are people who are convinced that it was secret ASIC miners. There are people who think that it's just a large mining pool deciding to become malicious. The truth is that we do know that this power was channeled through rental markets. There are active power rental markets, and I'm not here to name names, I just want to talk about the phenomenon. There are active rental markets where people can rent hashing power on demand at any time at roughly market rates. And it's possible that there are secret ASIC miners, but they could be running their power through the rental market, or a GPU farm, they could run their power through the rental market. Or maybe the attackers were just straight up renting on the rental market. But we were able to see that during these attacks, there was a huge spike in both the price being paid on the rental market and the amount of hash going through the rental market. And the amounts correspond to the power levels that would be necessary to create the level of attack we saw. And we saw the same thing happen with other coins before and after. A little over a week ago, actually it's last weekend, isn't it? There was an attack on Zencash.
Yep. I talked to Rob about that too, and they kind of came to the same conclusion that it was through, I mean, I guess we're not naming names, through that rental. Everybody knows what that is. And, you know, they have their vision for how they're going to defend this in the future and what some of the upgrades they might do. Obviously, I'm going to ask you what your guys' ideas are so far. And also, he mentioned that maybe that company needs to put some kind of limits or guides on it themselves. Obviously, they're trying to draw in as much revenue as possible, so they're not really tracking the hash. But they should start to realize that if they just keep allowing free hash rental like that, that they're really hurting the ecosystem as a whole, which then in turn hurts their revenue model down the road for the long term.
Right, right. So there are things we're doing in the immediate term and there are things we're doing that are longer term. In the immediate term, what we're doing, quite honestly, is just watching for these things to be happening so we can alert everyone. We have an emergency communications Telegram channel that we've shared with all the exchanges, and any exchange that doesn't have anyone in that channel should reach out to us and we'll get them in there. There are a number of fixes around the rental model where the people running the rentals might make changes, but the problem is that, you know, we've analyzed a lot of those, and although every one of them puts a hurdle in front of an attacker, none of them stops the attacker. There are always workarounds. It's like the solutions to the 51% attack problem itself. There are a lot of potential solutions out there, but most of them either raise the possibility of a different kind of attack. For example, if you do a solution which relies on nodes knowing what the real chain was, so you're giving power and authority to the nodes, you raise the possibility of the Sybil attack, which is just a matter of using VMs to raise a whole bunch of nodes, so you have more nodes than the honest nodes. You know, there's always another avenue when you close off one, or almost always.
Yeah.
We do have a lot of people working on potential solutions. We're involved in an online forum, which initially started as an ASIC resistance forum, but has now evolved into an Equihash defense forum. So we're working with other coin teams to develop and to discover approaches that are out there that could really provide more long-term solutions. In the medium term, what we're doing is accelerating an upgrade that we were already planning to do. You may recall that when Bitmain first announced that the sale of their Z9 ASIC miner home edition, they called it mini, but you know, home edition. They said that would be coming out towards the end of June. So we started down the path of changing our proof of work algorithm so that we would be on something that's not going to work on those miners, with a target of having a test net up and running and then rolling it out soon after or at the end of June. This attack made us accelerate those plans, because part of the problem with the rental market and the availability of hash power is that we're in effectively a large pool of power. There are close to a dozen coins using Equihash, and one of them, Zcash, has a much larger share of the hash rate. Mm-hmm. And you know, that's not an expression of love or hate for Zcash versus BTG. That's a simple matter of economics. You know, Zcash puts out a lot more coins per hour, Their annual inflation rate is something like 70%, and ours is 3.7%, something like that. So they're putting out a lot more coins, so they're going to attract a lot more hash power.
Yeah.
So by changing our algorithm,
there.
exactly. So by changing our algorithm to something else, we'll not be a small fish in a big pond. We'll become a fish in a pond where we're the biggest fish, at least for a while. So, you know, everything can be looked at as a temporary solution until some other problem grows up. But for a while, that'll solve our problem. So we've already published about our new hashing algorithm, which is really another equihash. If we want, we can go into the details of the equihash and why it's different and why it matters. But basically, we're going to a different implementation of equihash, which is non-compatible with the one people currently use, which consumes a lot more memory, and initial indications are it may also be more intensively demanding of the memory bus. And the net effect is that it can't be mined on an ASIC, or if it can, it's going to be mined so slowly that ASICs are completely non-competitive compared to graphics cards.
That's interesting.
So that will put us on a separate pool. It'll ensure that people can't mine BTG on ASICs, and it ensures that the honest miners can continue honestly mining and making a good, steady profit with our coin.
Yeah, so it kind of keeps the vision of Bitcoin Gold being a GPU mineable coin, decentralized coin. That was kind of their whole reason of forking from Bitcoin from the beginning. Hopefully it then dissuades these new ASICs to come online on your new network. And with you creating the new equihash, if you guys are the larger fish in that pool, then it should deter or make it harder, another hurdle for 51% attacks in the future.
That's right, that's right. And in addition, we are going to keep watching the rental markets, which is something, you know, we weren't actively monitoring in December. Our coin was doing really well, our hash rate was big, and nobody was paying any attention, except for a few people online who, let's give them credit, they were calling out that, hey, there's these rental markets, and they're often renting out more than a coin uses, so they can easily be used for an attack. And it has come to pass, including, you know, the buzz now is that a week ago, attacks like this happened on Litecoin Cash also. And it doesn't matter whether you're a fan of Litecoin Cash or not. It matters to realize that Litecoin Cash is mined with SHA-256. That is an ASIC mined coin. You know, so ASICs, a lot of people think ASICs, because they're more powerful, are a solution to the security problem. If ASIC power can be monopolized by a single party, whether it be by rental or some other mechanism, then it's going to be used for attacks, just like every other kind of hash power.
Yeah. Well, I guess got a lot of information there. Enough with the negatives. Do you guys have any new, or what projects, partnerships, advancements have you really made since last time we talked, or that you have on the near-term horizon for Bitcoin Gold?
Well, we've got a lot of partnerships and sort of increases in the going things, partly as a result of good relationships that we got from Consensus. We met with a lot of people, we touched base with a lot of people we were already doing business with, but there are a number of places that are looking to add Bitcoin Gold. We expect to be on new exchanges, we expect to be on new wallets, we expect to be on new hardware. All of this is going on. We also have an internal plan called BTG Pay, which I don't recall if we talked about last time.
I don't think we talked about that.
Sorry?
I don't think we talked about that. I think you're kind of hinting at some more payment channels and stuff, but you guys didn't have anything really set in stone.
Right, right. What we're doing that's a little different than some of the other pay programs out there is that we're not putting up a platform of our own. Okay. What we're doing is doing a program to connect people so that they can do this themselves. Because we're always being contacted by developers of payment systems that are looking for customers, merchants. We're being contacted by merchants who want to put up payment systems and accept Bitcoin Gold. And we're being contacted by consumers who have Bitcoin Gold and want to find merchants. So our BTG Pay platform really is about connecting all three of these sets of people to give them all the technology and let them find each other. And that's going to be coming soon after probably the rollout of the new website. You know, there's the content and the visuals. Yeah. So we're rolling out a fresh, clean view of the website, something we've been planning to do for a while. And we're also putting out a lot of information on the BTG Pay program. So that's going to help people get together. And we also have a growing ambassador program. It's not in open beta yet. It's sort of closed beta. We have some people who've contacted us and we're expanding in certain parts of the world. But we hope to, in the coming months, roll out the full ambassador program where we can help people in various parts of the world get information out to those local communities, because not everyone is aware, but in most of the non-Western, non-hyper-industrialized nations, currency issues are a huge problem.
Yep.
You might see Venezuela in the news, you might see some talk about Zimbabwe, but by and large, we're relatively oblivious to this. But people say Bitcoin is unstable, Bitcoin is volatile. Compared to a lot of these other countries' currencies, it's stable.
Yeah, I mean,
their local currency is far more volatile. So it's a huge draw to them. And they're in countries where they can't spend a couple $1,000s to buy an ASIC from a company that'll ship it in a couple of months and then hope it'll get through customs and get to them. In fact, we know people have done that in Venezuela. They order an ASIC miner and it never shows up, even though it says shipped. So in these countries, the fact that they can mine with a CPU or a GPU is critical. They can be involved in the mining process. They can be a full validating node and do it with hardware that's locally available. And they can get involved in a cryptocurrency, which is safer, more stable, and more securable against government intervention than their own local currency. So we think that's a huge thing.
Yeah, I try to reaffirm that as well, too. It's like, I don't know, if there's going to be one cryptocurrency, multiple cryptocurrencies that succeed, but you're seeing in Venezuela, Argentina, Turkey's been having some monetary issues. I mean, it's starting to hit a lot of these countries. And I think a lot of people that watch our content are from the United States and maybe some Europe and a little bit of Asia, and they're kind of you're kind of in a bubble and unaware of really what's going on in the global monetary system and really the purpose for cryptocurrencies and how these things are continuing to move forward. And I did notice, I saw that article about Venezuela customs starting to take away any, not just GPUs, CPUs, and ASICs anymore, but any kind of computer part in general. Yep. They're taking away because they don't want that. They don't want people mining on their network. Obviously, they also have government subsidized electricity. So essentially, you're kind of mining on the government's dime.
Yes.
And they're trying to produce their own cryptocurrency in the petrodollar. So you got a lot of collusion going on down there, and that's kind of unfortunate for those individuals. So
yeah, just a tiny piece of perspective. I tweeted just yesterday in response to a couple of conversations a paper looking into the number of currency collapses and their impact economically. And it's breathtaking. The number of currency collapses every decade is enormous. We're talking about dozens every decade. And remember, when Satoshi Nakamoto first put out the Bitcoin white paper, it was inspired in large part by the banking crisis, the economic collapse that was looming on the Western currencies. So it's not so foreign. It's not so hard to conceive that it might affect other currencies. If nothing else, even if the US dollar and the euro survive and they live in parallel to cryptocurrencies in the future instead of being replaced by cryptos, if nothing else, the competition of cryptos and the stability of cryptos will force governments to be more responsible, will force large institutions to be more responsible because they know if they screw around too much with the money, they will lose market share to the cryptos. Yeah. That's just the truth.
I think you're starting to see a lot of advancements in the banking system with how they're trying to, incorporate, like, let's use Xcurrent from Ripple, for example, and just trying to up their game, reduce their fees because they know they're going to have to be competing with cryptocurrencies, or they already are competing with cryptocurrencies in some market share. Obviously we know cryptocurrencies are worth $400 billion. If they didn't exist, that money would probably be flowing into traditional markets and the traditional banking system. So they're kind of already, I think, feeling the pressure right now.
Right. And a lot of people in the crypto space are sort of negative about any cooperation with the traditional banking industry. I'm not in that camp. I'm pretty firmly of the opinion that before cryptos can become really big and eventually bigger than the traditional space, there will need to be a lot of interactivity. There needs to be the ability for people to flow funds from fiat into crypto, but also crypto out to fiat, but also for both sides to use the other on demand easily. The liquidity, the motion between them is what's going to enable the free market, which allows cryptos to rise. I'm confident cryptos will become preferred because of their attributes and qualities, but without a free market that lets cryptos compete with the traditional space, they can't rise to the fore. So I'm in favor of more competition. And that was an interesting thing for me at Consensus. There were a lot of traditional investment banks there. There were a lot of people from OTC desks there, from companies that we don't know as being crypto companies, they're traditional finance companies. There were countries there. Canada had representation. There were some Caribbean islands with major representation. These were all places that were trying to draw crypto to become their sort of more of their traditional institutions, more of their standard institutions. There was news just recently of the first country that that's using a crypto as their national currency. Now, of course, it's a tiny island. But experiments have to start small. There are lots of bigger countries playing with doing this in a responsible way, and we'll see it happen soon enough. On the subject of interactivity, I'm probably remiss to not have mentioned one of the biggest technological advances within Bitcoin Gold, and that is that we're on the verge of putting out Lightning Network.
Oh, there you go.
Now, I didn't claim that as our invention because, of course, Lightning Network is well known and is being developed by others, but we're developing an implementation on Bitcoin Gold. We've already got Lightning Network transactions, multi-hop transactions happening on internal testnet. We hope it'll be ready to put out in a public beta, relatively soon. But a lot of these things, although development on that has continued because the Lightning Network devs are largely separate from our other devs, a lot of things have been put on hold because of the need to aggressively accelerate the timeline for our network upgrade to the new algorithm. So the network upgrade is going to require a hard fork. That's going to be happening in the next couple of weeks. It can't be too soon for us, but it can easily be too soon for our partners. So we are being extremely careful with that. If there are any of our partners listening, exchanges, retail money changers, wallets, explorers, anyone, hardware wallet manufacturers, if you haven't gotten in touch with us, please give us your contact info so we can make sure to send you the latest information as it happens. We've got some resources up in a new GitHub about the new algorithm and the mining right now. Oh, and mining developers, especially AMD miner developers. If you're an AMD miner developer, we're worried that that might be a bit of a hole in the initial days or weeks after the upgrade. So get in touch with us. We'll make sure you have the spec to build against. So yeah, we need to hear from all these people so that when we are up and running on our public testnet and we pick a fork height at which the network upgrade will happen, we want to make sure everyone else is going to be ready. We want to make sure this is smooth. We don't want to leave anybody stranded or having difficulties. But we can't do that unless they're in touch with us and tell us what their needs are.
I'll try to present that to my community as well. If they know individuals, they can reach out to them. Also, the last question I really have is, you said you're integrating Lightning Network. Is this like a new iteration that you guys are creating, or are you building it off the current Lightning Network or the Lit network that MIT is developing, or you guys kind of doing your own thing?
No, we're doing, our code is based on forks off of existing implementations that are done for other coins. We're adapting them for Bitcoin Gold with the intention of A, providing Lightning Network in a compatible manner to other implementations, and B, making it possible potentially to get our code brought into their software so that people can produce Lightning Network software that's compatible across the coins. And C, we're looking for cross-chain atomic swaps. We're looking forward to the time when the liquidity between coins on Lightning Network can be much quicker and easier than the liquidity between coins currently. And obviously much more liquid than between fiat currencies.
Yeah. Well, awesome. That was a really good talk. I like how we kind of hit base on 51%, but also what Bitcoin Gold has going on in the future and kind of your vision for cryptocurrencies in general. Did we miss anything before we kind of wrap this up? I think we touched base on almost everything.
That's pretty broad. I've touched on it, but I'm a huge fan of how cryptocurrencies are going to bring stability and economic possibilities to parts of the world that currently don't have them. That's something that's probably not talked about enough, but something which I'll be talking about in the future going on. And I'd like to mention that was always one of the core tenets of Bitcoin Gold. It wasn't, step A, but if you look in the initial white paper, well, we released it as a roadmap. But the roadmap PDF from last summer makes clear that our long-term plan is to help bring crypto into emerging economies and to make sure that everyone has access. So I'm glad to see that's becoming a broader concern and an issue with more awareness across the crypto space, because I think that's going to be huge.
Awesome. Thanks, guys, for watching. If you guys want more information on Bitcoin Gold, make sure to follow them over on Twitter, Telegram. Check out their new website when that comes out. And until next time, guys, stay tuned for your daily updates on cryptocurrencies right here at Learn Crypto.
Thanks, Nick. Thanks, everyone.